And we're live. So welcome to this week's Crypto Bootcamp Hangout. With us this week, we have our resident noob in-house, Jason Weiser. We've got our man in DC, Vincent Mattioni. And we've got our classy gentleman, Nico. I'm going to say Nico. I don't think I've ever heard your handle pronounced out loud. So that's what I'm going with.
Sure. I'll leave a little mystery there. And you can just you just come up with whatever interpretation you like.
We could call it Nori, you know, I mean, whatever. That's
Nori. No, man, noir, like, you know, like old detective movie type stuff.
Exactly.
like the French people say. So, parle français, you know.
Right. You know Gemma Powell?
Yeah, Gemma Pell, Nico Noir.
No, I mean, like, Gemma Powell.
Frere.
She's the waitress down at the restaurant locally.
Oh.
At least I think that's her name. She keeps pointing to herself and saying Gemma Pell, and I go, "Hi, Gemma Pell."
Okay.
That's terrible.
Yeah, that's how we're starting off today. Terrible friendship.
Awesome.
That was a very good joke.
I think this is it's shell shock because we're in week 4 of our annual January crypto bloodbath.
Yes.
Quick status check. How many people here are still holding a spread of altcoins and are bleeding terribly? Yeah. I like you know, like there's one
pennies,
you know, when you look at it, it's the total funds, and it gives you that USD, you know. And I have been watching with glee all through December that number getting bigger and bigger and bigger and bigger. It's not bigger right now.
Not anymore.
I think we were talking with Alex the other day. I mean, I think I'm probably still at about a 10 to 12% profit over the actual USD that I've put in, but Lord knows that a lot of my growth gains have been wiped out with the downturn.
Yeah, when I was way up, it was great, but I'm still up a little bit, and that's okay. But not like before.
Right. But trading in the Lambo for a Celica
for a while.
You know, at the end of the day, that was one of the things that we talked about last week. Is, you know, none of the coins that I invest in are coins that I'm just wildly speculating on. They're all projects that I think have a strong underlying promise. And so if I end up having to hold for years on end while that promise comes through for their value to bear out, I'm not concerned about that. You know, it's the same as Nico, you know, doing an automated buy while the coins were $100. You know, it's just it's an easy thing to put that cash in, forget about it, let it do its thing. We know the technology is not going away. You know, the specific implementations will vary. Some projects will be more successful than others, but at the end of the day, it's hodl for life.
Yeah, definitely.
Pretty much. I'm waiting for Lightning Network to on this year.
Dude, Lightning Network's already up and running. I mean, they're increasing nodes pretty rapidly.
That's good.
I don't know if you guys have taken a look at the MIM pool or the average transaction fees, but those have been just sinking like a stone for the past couple of weeks since Lightning got going.
Cool.
So is that proof then that Lightning Network will be the savior of Bitcoin as currency?
Well, I mean, I think it's proof how useful a second layer is on top of there, and that it's better than just cluttering up the blockchain with insignificant transactions. I mean, the enthusiasm for propagating it, and in addition to increasing adoption of segregated witness wallets and nodes, I think is I think I'm very bullish because of that. Like it might take a little bit before most of the market starts to notice the benefits of that, but anybody that's like most people are still using Coinbase, and Coinbase is really slow to make any kind of good, like, beneficial changes. So people probably aren't noticing the reduced transaction fees if they're still going through Coinbase. But anybody else who's setting up wallets outside of Coinbase is probably wondering what people are talking about when they're saying $20 or $30 transaction fees. Because, like, if I've got my ledger, and if I transact off of there, I can get transactions, in blocks within a matter of minutes for under $1 at times. So, I think once people start noticing that, that's going to be a pretty big deal. A lot of the merchants that were not favoring Bitcoin anymore might be changing their minds.
That's what I'm looking forward to, turning it around, having things get better. I mean, right now, people are just out because they don't really understand what's happening.
Yeah.
They don't understand the magnitude of Bitcoin and what it means, why it was developed, or who it was developed for. So I'm liking it. It's all good news.
Well, Nico, I know that you and I we're both bullish on Bitcoin for the long term, but I think for entirely different reasons. And I know for a fact we have entirely different perspectives on it. I like Bitcoin as a better store of value than other, like, long-term commodity holds like gold.
Sure.
I think that when it comes to issues like security and storage and being able to actually hold it, most people who are investing in gold, right, they're not really investing in gold. They're participating in, like, a gold share program where somebody else physically holds the gold, and
they're buying a voucher.
Right, exactly. And the reason for that is because it's wildly impractical to store and hold gold.
Sure.
If you've got $500 million in gold, you better have a closet-sized safe for all that bullion that you have to tack around. And then what's more, it's wildly difficult to convert that gold back into USD, something that I've heard as a constant complaint about Bitcoin, but it's significantly easier to get your USD back from Bitcoin than it is from gold,
Yeah.
So it's I like Bitcoin as a store of value, but I haven't liked Bitcoin as a transactional token at all. One, because of the volatility that's inherent in it, especially. I've regularly argued that if it costs me 1 Bitcoin for a gallon of milk today and 1 Bitcoin for a Lamborghini tomorrow, that's not a fucking good currency. And obviously that's a wild over exaggeration of the volatility, but as we've seen over the last 8 weeks, there's been over 100% variance in the value of the token. So
sure, I mean, I think that's a valid concept. Like, just in concept, that's a valid concern, and I share it. But at the same time, like, the value of $1 is pretty well understood, because a lot of people have been using it for a very long time now. And so the market and that too, I guess. I mean, I don't know.
Pricing controls in place that control the amount of inflation and deflation, or at least limit the amount of inflation and deflation.
Sure. Yeah. Well, yeah, that's true. But I mean, it's been pretty consistent. Like, I think that after a while, once a much larger percentage of populations are actually dealing with Bitcoin, whether they're transacting with it or whether they're just holding it as a store of value, that volatility will level out, and it'll also be easier as, like, I mean, I guess if the concern is, well, I'm going to pay this price for a Bitcoin today, and then tomorrow my purchasing power with it is just going to be something that I can't even speculate on. Well, that's certainly a concern. On the other hand, in terms of like, if I've just got some Bitcoins, like I've got a bunch of Bitcoins in a wallet, and I decide I want to go buy something, it's not really much trouble for second to second the value of whatever I want to buy be calculated in Bitcoins, and I just pay that that amount.
Yeah, but that's only when we're indexing back to a stabilized currency, right? Because it's
Sure.
not bad if we're saying, okay, well, this costs $2 USD, and maybe
right.
that's 0.001 Bitcoin today, and maybe it's 0.002 Bitcoin tomorrow. That might not be as huge of a thing, although that's still a significant variance in pricing compared to USD's like 1 to 3% a year variation.
Sure, I get me. I was thinking about that earlier. Actually, I was just driving through town as I was going to get gas, and I was thinking, I wonder at what point, I know that in general the price of gas right now is about $2.25 per gallon. At what point will we be just so familiar with Bitcoin and the way things are priced in Bitcoin that I'll know, okay, a gallon of gas is a thousandth of a Bitcoin or a hundredth of a Bitcoin, and that's just kind of second nature. And you know, day to day, there's small fluctuations, but generally, you can look at a good and price it in Bitcoin.
Right.
I don't know. I think that'll be interesting to see how we move toward that, if we move toward it. But I don't see why we couldn't if we could do that with dollars. I mean, especially if you think back, back to when a dollar was based on a physical commodity, then sure. So people were thinking, oh, well, that thing costs $5 because it's worth about whatever an ounce of gold or something like that,
right. And that's one of the things to me, you can make a good argument for Bitcoin as a medium of exchange. But when we talk about currency, right, currency is what things are priced in.
Yeah.
You know what I mean? Mm-hmm. I mean, we can say that this car costs $50,000 and I'll accept $50,000 in blow for it, right? But we're still thinking in terms of USD. That's the currency at play. Just because we use a different medium of exchange, we're still really dealing with USD as currency. And so when people talk about the future cryptocurrency, I don't see that future actually manifesting until you get to, hell, this costs 30 Ripple. You know what I mean?
Yeah. Yeah, I get you. But I mean, it's going to be like the dollar won't be forever. Some currency will supplant it. I don't see why it won't be Bitcoin. I certainly don't see why it would be some other derivative cryptocurrency over Bitcoin.
Well, I mean, the reason I tend to think that other crypto tokens are potentially a better match to become actual currency is because Bitcoin was the first in the space, right? It's based off the original paper. It's got all right, we got Brian in the mix now too. It was the first execution of this space, but I've never seen any technology where the first iteration demanded that be the only iteration because they were first. You know what I mean?
Now this is a discussion that you and I have gone back and forth on a few times, and you make that point. Bitcoin was the first, but Bitcoin today is drastically different from Bitcoin in 2009 or 2010, and whereas other technologies are protected or limited by patents and copyrights, Bitcoin is not subject to that restriction. And the point I feel like a broken record saying is that any improvement that any other cryptocurrency, any other token makes, if it's truly beneficial, if it is just so fucking awesome that it makes it better than Bitcoin, Bitcoin can just integrate that improvement. So it's hard.
And why would Bitcoin implement the application layer architecture that Ethereum and now Neo are using, which actually drive adoption?
I'm sorry. Say that last part again.
I said, why wouldn't Bitcoin implement that application layer architecture that Ethereum and Neo use to drive adoption?
Does that make it better as money, or does that make it better as like a cloud computing platform?
Well, that makes it better from an adoption perspective.
If you're saying it I mean, it doesn't really matter what it makes it better as, but if people are being pulled to a different token by your hypothetical, right? If they're being pulled away from Bitcoin to some other token based on, ability, then Bitcoin should want to adopt it to bring that attention back to them, right?
Maybe. I mean, are they going to that? So there would be people going to that token to use it as because it fulfills some utility, and then there will be people going to that token because they're speculators, just like there's Bitcoin speculators, and they're just pulling the slot machine.
Well, yeah.
But here's the thing, right? You said earlier that one of the things that Bitcoin needs to gain that stability is mass adoption. And so what I'm suggesting is here's Ethereum, here's Neo, who have both created mechanisms which drive mass adoption. And that mass adoption plays out in more than just who's using the token from a utilitarian perspective. It drives what wallets we're downloading, what infrastructure we're participating in, what exchanges we're on, right? Like it creates and drives community growth. And March of last year, Ethereum trading volume, right, exceeded Bitcoin volume specifically because of the ERC20 layer.
Okay.
I think in order to change the code for Bitcoin, it has to be approved by more than 50% of the people that are actually running the software.
Yeah. It has to be approved, but I mean, theoretically, it has to be approved, from what I understand, by like either 85 or 91%. Otherwise, it forks. And sure, that makes it difficult for change to happen, but I think there's also benefit in that, because it means that improvement has to be just really, really freaking amazing, and it has to be so amazing that vast majority of the network is convinced that it makes it superior before they'll go in on it. And so that's why you see like people have I got a better idea. It doesn't gain a consensus, so they just fork off, and now they've got their derivative Bitcoin that has made some sort of compromise. It's great for this reason, but we've sacrificed security, or sacrificed some other aspect, sacrificed decentralization in order to implement it. Now, as far as the developments in Ethereum, I can't. Chris, you're probably much better versed on that than I am. I don't know all of the applications or the versatility that's been implemented into it. So maybe you're right. Maybe I'm wrong, or maybe I'm overlooking something there. I guess I just look at it I'm approaching it from a layman's perspective and from a fundamentals perspective, and it seems to me like the changes that are made to Bitcoin are made so that it functions better as money. And what I understand in general about Ethereum is that it offers a lot of utility, and probably functions better as something other than money, something more like distributed computing.
That's accurate. I don't think a lot of people are actually like, there are a pretty significant amount of financial platforms, right? I mean, Crypto Kitties, Crypto Warriors, Crypto Celebrities, you fucking name it. They're all Ethereum-based applications, and they're using Ethereum for trade. And then a lot of these underlying altcoins that are built on ERC20 or Net5 contracts are using proof of stake, which means that you have to put Ethereum in to cover your transactions on that network, right?
Right.
So nobody's actually arguing that Ethereum should be used as daily currency, and yet Ethereum is actually being used more often as transactional currency than Bitcoin is.
Oh, is it being used as transactional currency, or is it just being used as on trading platform like exchanges?
No, I'm talking about all those applications I was just talking about. Like, that's what you do on Crypto Kitties and Crypto Celebrities and all that. You buy these cards with Ethereum.
Gotcha.
Right.
Okay.
Well, and Chris, it was more like to what you're talking about, the future of a point in time where you can buy a car in Ripple. Well, right now on these platforms that are providing a digital landscape, which, to be honest, the world is morphed both digital and analog in every place we're in, right? So at some point, and even now on the Ethereum platform, you buy things with Ether, right? You buy CryptKitties, which at one point in time you were buying them for $20 for Ether. Now these kitties are thousands and thousands of dollars for freaking, so I think what's happening with crypto is our original ideas of what financial dollars and what they're being used for is being turned on its head, where people are buying stupid little programs, crypto kitties, right? And that has value to someone, and they're willing to work and slave in the real world to put their money into the system and exchange it and buy something like that. Or their kid is, and they have to do it because that you have to do what your kids want, so it's a whole new world, and these coins are what's going to run it.
And we're just seeing already, even in the secondary coins that are built on top of the ERC20 contracts or Net5 contracts, which is what the NEO network, we're seeing actual usage of Ethereum as currency, even though no one's making the argument that Ether should be the currency. But we're seeing it used as currency more than we're seeing Bitcoin used as currency. And from a web development perspective, I kind of think of like the Satoshi Institute as sort of the W3C, right? The W3C is this ancient organization that's been around since the beginning of the internet, more or less, and they put together standards and they created outlines, and they had a lot of heavy minds who helped shape the technology and move it forward. And they were responsible for the HTML4.0 standard. And then 12 years later, they came out with the HTML5.0 standard, and once a decade or so, they do something meaningful in the space that helps improve everything for everybody. And that is sort of the underlying technology that it all runs on. But now if you're building a web platform, you're actually building it using JavaScript or, PHP or Python or Django or this or that, and HTML is sort of that underlying infrastructure. The TCP IP architecture is still how it all communicates and talks to each other. But it's such a high level influence that it has very little impact on the day to day. You know what I mean? And that's why I love the idea long-term of Bitcoin being that permanent store of value, that high-end index against which all other cryptocurrencies are measured. We've seen recently that Russia and a few of the other major players, China as well, I think, has been stocking up on gold, with a lot of economic analysts to believe that they're gearing up to the end of the petrodollar. And I really love the idea of the bit dollar based on Bitcoin being that replacement for the notational value index that the petrodollar provides. I can totally see that being the case,
Well, I think that raises an interesting point, or something that I was very interested in. I guess back around the 2012 election season, when the media and the government were trying to convince everybody that Iran was the boogeyman of the world. And it happened to be at about the same time that Iran was starting to, from what I understood, sell oil for precious metals, and starting to build up a competing fossil fuels market to OPEC with Russia and China.
Is that water? Yeah, you probably shouldn't do that. Was that Brian? Yeah, mute yourself next time, Brian, asshole.
Sorry, washing dishes. I'm washing dishes.
Sorry, Nico, go ahead.
I was just saying, I don't know how much of what I said came through. I was just mentioning that
building up Iran as the boogeyman that we created, by the way, by completely fucking over their constitutionally elected government.
Yeah. Oh man, don't even get me started on the fucking coup d'etat. But yes, which happened to be about the same time that Iran was trying to set up basically a competing fossil fuels market through selling oil in exchange for gold and silver. and working with China and Russia to set that up, and that would have totally been a problem for the dollar.
Upset the US market substantially, no question.
Yeah, but
And so we threaten them with war. Nice.
We can threaten them, and we can threaten to go to war with another country to protect the petrodollar, and we can manufacture regime changes. But that solution is a lot more difficult when dealing with a completely decentralized currency.
Yes.
And so that's one of the things that excited me so much about Bitcoin when I read about it is you can't attack some government because this threatens your currency that you've used to yoke your citizens under your authority. So I find that to be a really exciting prospect about it. I think it'll be interesting seeing how they do try to attack it, but I mean, it looks like lately really all they can do is make some half-hearted announcement about regulations so that it causes a momentary price dip, and then you find that people in those governments are buying it up in the dip, and then it just rebounds.
Well, I think that there's a much broader attack surface than what you're describing, and we've already started to see some of it. For instance, I used to be able to easily buy cryptocurrency on any of the exchanges that accepted a debit card or credit card, and now the vast majority of my debit cards and credit cards no longer work. In fact, when I tried to use my bank card this last time to buy some more, it triggered a fraud alert. And I got a phone call from my bank immediately. So Coinbase and a few of the other like USD tokens, we'll see how long Bittrex lasts in this space. But 3 of my 4 debit cards right now will not work on Coinbase at all.
Well, not just that, but I mean, I'm sure you've probably seen plenty of stories of people where banks would cancel people's accounts when they discover that they were using that bank account to wire money to Coinbase or to make Bitcoin purchases. But I don't know. I think that's like
cash into Bitcoin, right? So all the standard black market methods that used to be out there aren't really effective for cryptocurrency, because you have to have your currency in some digital format to be able to interact with the marketplace, to be able to exchange USD for crypto.
Yeah.
And those systems are all privately controlled.
I see that as a temporary problem with a tremendous profit motive or a profit incentive for people who develop workarounds.
Well, I mean, your workaround issue is going to have significant obstacles or barriers to entry if you've got an SCC and an FTC who come together to decide that cryptocurrency is bullshit and U.S. consumers should not participate in it. Therefore, they make a ruling that all U.S.-based banking and transactional systems cannot participate in cryptocurrency markets.
Well, good. That workaround will have to be incredibly robust to get around those challenges.
Well, then the other side of the equation is, one of the biggest things that I found super scary to the cryptocurrency marketplace is the attacks on network neutrality. Because if we normalize deep packet sniffing and we're allowed to degrade or block certain kinds of network traffic utilizing deep packet sniffing, then even peer-to-peer mobile solutions where it's wallet to wallet on your mobile device could be shut down just by sniffing for that form of transaction.
So and
mesh network. Sorry.
I mean, mesh network really is about one of the few solutions that'll be a workaround to that. But even still, mesh network is only as good as its coverage. And the coverage on mesh networks is a tiny, tiny, tiny percentage of the U.S. versus something like 99% of U.S. network traffic going through one of 4 major ISPs.
So would VPNs be a possible solution to that?
Depends on if they allow VPNs.
Yeah, they can. I mean, they could basically, with deep packet sniffing, realize you're going through a VPN and be like, oh, well, listen, this IP address is using a VPN. It also depends on if the VPN is being honest with you. You're like, there's a whole nother layer of, truthfulness. Be like, we don't have any logs, and they're except the ones we send to the, NSA and the, FBI and those.
An hour. Yeah.
We don't have any logs. We just give them direct access to our servers so that they know who comes and goes. We're like, so.
I mean, the entire concept of a decentralized cryptocurrency network is that it's a trustless network, right? You don't require any additional validation because the ledger makes it clear what the transactions are. But if you require all these secondary systems to be able to interact with that trustless network, you lose the entire benefit.
Oh, sure. But I mean, I don't know. What's the alternative? What does that mean? Just give up on a transparent, decentralized currency and just continue to relinquish that financial freedom or to financial authority to these, I don't know, governments or whoever?
What has to happen? I mean, and one of the reasons why I'm so glad for the rise of altcoin development, I mean, because I 100% disagree with that paper from the Satoshi Institute that you share frequently. 100% disagree. Their entire is that other altcoins only devalue the purpose of Bitcoin. I think that's wildly short-sighted and wildly egocentric, for that matter. It assumes that they have thought of or think that they can think of all the possible problems that come up in the space, that they should be the authority of that space. The way that they're acting and the tone of that paper seems wildly antithetical to the very purpose of an open development environment and all the rest of that. They're very, very brand conscious. And I disagree with almost all the conclusions that they make in that paper. And one of them is this. Altcoins are good for the marketplace, A, because they approach different problems with an eye for specifically solving that problem. There are altcoins that are regulator friendly. I think that's a requirement to gain mass adoption. I think you have to have your Ripples and your Cardanos out there to give the banks and the SEC and all that something that they can play with and make them get used to the idea of an efficient blockchain solution for financial transactions, get them to adopt it, you know? And at that point in time, if you have a significant number of mainstream applications that are using these same protocols, these same network ports, these same traffic types, then you start to gain some security through obscurity, because maybe this is a token that follows all those things, maybe it's not, but they look the same in network traffic, you know?
Yeah.
Yeah, that's really, security through obscurity is really the only way. Without net neutrality, without the ability, you know, for us to legally be a country where eavesdropping is not acceptable again, then, you know, unfortunately, that's not going to happen.
I want banks to adopt blockchain wildly. I want a government fucking cryptocurrency version of USD. I think that's a fantastic idea. Because when 80% of all network traffic is cryptocurrency transactions of some sort, figuring out my drug coin network fucking protocol is going to be a lot more difficult.
Right. I mean, it comes with it's going to come with its gifts and its curses. It's going to be difficult, but you know, we're fighting for freedom in a place where, you know, it's the new age of what our forefathers did before us, right? We have to find a way to fight, you know, whatever it is. I don't know what it is, but I'm sure we'll all be here talking about it next week.
Yeah, I agree with that.
Yeah, there was a long time where Microsoft Windows dominated the computing space, right? I mean, just the unmistakable 400-pound gorilla in the room. And, you know, you had Linus Torvalds comes out and he's like, fuck that. I can make an OS that'll run a desktop pretty reasonably, and you can run it from a USB stick, right? And so because of that, right, the original raw Linux, you know, that you could get on a fucking 3.5 floppy and boot up, and there's your OS, and you flip the little tab on your floppy over to write protected, and now it's never going to get a virus because nothing can actually write to the kernel at all, right? You know, that was the Satoshi implementation of Linux, right? You know, but then since then we have hundreds and hundreds of implementations of Linux that are specialty purpose. I mean, we see CentOS and New wildly in the web server space. Everybody at this point is probably familiar with Kali Linux because if you watched a hacker movie anytime in the last 5 years, that's what they're using, you know. little Mr. Robot action. You know, you got FreeBSD, which was sort of the, hey, we can build computers for poor people with, you know, basically no money, because here's a whole little thing that's set up that makes it easy. You know, like, you have all these specialty implementations of that technology that are all built on that core technology and use the same principles but solve specific problems, you know? And because of that, Linux has snatched a pretty substantial portion of the market space. Hell, it's baked into the fucking Macs these days even. Get yourself a Linux shell anyways.
FreeBSD.
Yep.
Hey, Chris, thanks for inviting me. I'm sorry, I've got to jump off. Something came up real quick, but I appreciate the discussion. This has been a lot of fun. I'll definitely try to join in on the next time you guys do this.
So feel free to jump back in. I appreciate having your input.
Okay, thanks, man. Take care.
Later. So, Jason, you got any noob questions for us this week?
I don't. I've pretty much just been laying low all week. So yeah, no, I'm just, you know, holding and waiting at this point, waiting for next week's check to throw some more in there. Not at all, you know, I blame you that you brought me in, you know, 2-3 weeks ago, you know, back when, you know, Tron was 10, you know, and you couldn't have waited 2 more weeks before you said, hey, come check out this boot camp thing. You know, that would have been nice of you if you'd just waited 2 weeks before you dragged me in. But
5.
What's that?
So you'd have got Tron at 5.
Yeah. I mean, so yeah, I'm pretty much half stack on everything now, because everything half stack since since I certainly, of course, don't blame you. It's been a fun ride. It's been I can see where it's going. I mean, where my personal strategy is going to be headed. But no, nothing this week, unfortunately. Just really kind of watching it. And
you know, it's because I watch Tron frequently. It's one of the altcoin projects that I'm most excited about. Obviously, I've gone deep stack on Tron. I expect to see a lot more growth out of that in the future. But, you know, I think it's a good example of, you know, when the markets are in the toilet, you stop paying attention to the markets and you start focusing on the projects, right? And what we've seen with the Tron project is their number of commits has ramped up. They've done something like 400 commits at this point. Their timeline for development looks like it's coming along significantly. And these are open source projects, right? You can go to the Tron GitHub and watch the code as it's being built every day. You can see what's being put in and how many people are participating as developers, the issues that are reported, how quickly they're solved, merge requests, pulls, you know, I mean, all that kind of stuff. So, you know, that's the place when the markets are down, stop watching the markets, right? Go watch the development, because that's the thing to focus on to make sure that the coin you've invested in is making the progress that you expect it to make, you know? And that's why I've said frequently, when it comes to Tron, I'm not looking again until April 1, because they've got some pretty significant timelines by the end of March, you know, and I expect to see those timelines met. And as those deliverables start coming online, that's where I expect to see the value of the token begin growing again as people are excited about the project, you know. And typically, the price is a function of volume. So as soon as you get a bunch of people in who start buying, that's when you start triggering, you know, all the sell orders that are set at a certain level get exhausted. The next level of sell order gets exhausted. The next level of sell order gets exhausted, and on up it goes, you know. So that's, for me, that's the thing. I think we've got some clear guidance on where that's going to be going and what's going to be happening with it. And I'm perfectly happy with the progress that's been made so far. So I pay attention to the markets when they're hot, and then I pay attention to the projects when they're not.
I got a question, just throwing it out there. What are you guys' opinions or thoughts even on Litecoin right now, and how that fares as far as a project basis? Or what are your thoughts on that?
Well, I think Litecoin is kind of interesting, right? The CEO of Litecoin said that he pretty much fully divested himself of the Litecoins that he was holding. His explanation for that was that he felt it was a conflict of interest. Every time he said something about Litecoin, the price would vary, and so people were calling him out and saying, you know, you're just trying to do this to make a profit, etc. As it turns out, you know, he exited near the top of the value for Litecoin. So,
right.
he made a bank on that. What's happening for the future? I don't know. It's hard to tell. I haven't really looked into their project development recently. I'm not really sure what their roadmaps are right now. They're a fairly mature coin. They've been out for a long time. Litecoin is still typically what I use when I'm trying to move between markets. I'll move everything into Litecoin and then shift that Litecoin from one market to the next because it's fast and transaction fees are low. So it's I think Litecoin probably has a lot of utility right now as an actual currency, but I don't know if that's going to remain the case for the future. And I don't really have a good sense right now of what their development roadmap looks like.
But is it? You mentioned that before on speed and cost, but so I tested it, going off your suggestion there, and I tried ETH and then I tried Litecoin, and both went just as fast.
Well, and I'm not saying that ETH is super slow. I'm just saying really in comparison to Bitcoin.
So you would choose Litecoin over ETH when compared to Bitcoin if those are your choices?
It probably depends on the current price of each at the moment and what the transaction fees are.
Are you sure it's not just a nostalgic thing with you? That just Litecoin was just kind of your thing a while ago?
I don't really actually have any form of emotional connection to Litecoin, so probably not. I think it's mostly just it's the lowest USD value of all of them, right? And it has the least amount of attached data in each transaction. So I expect that my total associated fees and the total transaction time are going to remain faster and cheaper, at least for now. That's certainly something that could bear some experimentation with. Maybe ETH is at a point where that's, not the case. But I know that when I've done my transactions between exchanges, I started with ETH because that's where I really got into the marketplace. It's the one that I'm most interested in out of all of them as a granddaddy coin. Although I'm starting to get a lot more interested in Neo now that they've got their Net 5 protocol. It's Litecoin just seems to be faster and cheaper so far in all the transactions that I've done. Is that true across the board? I don't know. And I certainly don't have any emotional connection to it. I was never heavy into Litecoin. And of all the coins that I traded for speculative profit, Litecoin's the one I made the least amount of money on. So, I don't owe it anything.
Thanks.
Who knows? Maybe that's something we should dig into for next week. Is there a future to Litecoin, or what does that future look like? Will Litecoin eventually become submerged into something else? Litecoin was the first alternative. It was the first altcoin, right?
Right.
You had Bitcoin, and then you had Litecoin, the lighter, faster Bitcoin.
Right. Right. Well, and to what Nico was saying earlier, like Litecoin was trying to be something in the same, sorry, baby. In the same instance, the Litecoin was trying to improve on what Bitcoin already had, right? So if they couldn't do it, why would some other coin be successful later? Or what did some other coin do that Litecoin didn't do? Obviously, like Ethereum was the first one that adopted a platform in which people could
Build on it.
create coins and do all of the other application and whatnot. But what and maybe that could be the topic of next week. Like what's in an altcoin? What's a good idea for an altcoin to anything, right? Like, is it good to have, because they've got altcoins for everything now. Like they say they've got altcoins for video games, that it's only going to be for that. Like, is that a good idea even?
I mean, Bitcoin came out as an alternative to Bitcoin, and yet now there are hundreds of alternatives to Bitcoin. Does Litecoin have a future at all?
Right.
I don't know.
Right. Or are they just the first one to get left in the dust, right?
I mean, Bitcoin Cash came up out of nowhere, and its whole thing was being a more ready, spendable version of Bitcoin. A fork of Bitcoin that was attempting to solve some of these issues.
That brings up a really good question. Just Bitcoin Cash in and of itself, right? Because I don't know about the rest of you guys, but at the time I had Bitcoin, right? And I immediately got the same amount of Bitcoin Cash. While it wasn't an equal value, it wasn't like I doubled my money. I surely came up some money for no reason. You know, it's like, here you go, boom.
And the Bitcoin Cash like spiked in price in one day.
Yeah, you know, and that's one of those things. It's like that really made me worry. It's like, wait a minute. You're like, so all of a sudden I just have some more cash. When the hell does that really happen in the real world? Like, when do you have $1,000 in your bank account and you come the next day, you're like, you know what? Here's 500 euro too. Fuck it. Just cause. Why not? It's not a fair amount.
There is a real world analog, I think, and that would be stock splits.
Okay, sure. You're right. Right. Stock splits.
So I had 1,000 shares of IBM. Now I have 2,000 shares of IBM. You know, all the people who invested in Google when they did their big change around to Apple found themselves holding more shares than they had before.
Right, but isn't there something, because I've never been in a stock split.
Sorry, Alphabet. Jesus, that was a mistake.
Apple, right? Yeah. I thought that was a little.
Alphabet, not Apple.
When there's a stock split, isn't the resulting stock less valued than the original stock? Like, don't you have one at 300 and then now you have two at 150?
Essentially, yes, but now you have two, and if the company fundamentally remains strong, those two are going to quickly get back up to that same level of value that you had before.
So there's a theory of it'll generate interest in the stock because it's more affordable.
Right.
But with Bitcoin Cash, it wasn't even like that. It was like, here's some extra. It wasn't even like, here's your $500 got split into two 250 coins. It's like, no, you know, you got $500 over there. Here's another $300 of some different shit, just because you were holding that.
But you have to remember, in a fork, right? The fork still has the same ledger history that exists prior to the fork, which means that you have those transactions on both copies of the ledger. So I mean, they couldn't possibly have it in any other way. Like that's just how it's always going to be. If you do a hard fork off something, that's why you have Ethereum and Ethereum Classic, right?
Wait, so every time there's a fork off of any certain chain, I should then buy equally profit on the new chain. And so where are all my coins from, like all those other forks that we've had, like Bitcoin Atom? They owe me some money.
Is that actually still out there? Is that still running?
I don't know. I saw some shit in a Telegram chat. I'm just wondering, like, who owes me money from all these forks?
You know, I think it really depends on how they've structured it and all the rest of that. There are folks who can say, yeah, I mean, maybe there's some architectural ways, and I've never been involved with the development at the root blockchain level. So, you know, maybe there's some things where that's an optional thing or something along that line. But I think the whole purpose of you know, like Bitcoin Cash and Ethereum Classic and some of these other forks where you know, they're perpetuating the same ledger that existed up until before the fork. As long as there's a mechanism in place for you to be recognized on the new fork, you know, unless they're just setting it up that all previous users are invalidated or whatever, and you know, that fork is going to show your history the same as it did. You know, like at some point in time, if you trace all those Bitcoin forks back, there's a ledger that existed before then. You know what I mean?
Sure.
That ledger shows that you have transactions on it.
That's right. Right. Well, and the crazy thing about that is, you know, as far as adoption goes, I guess that's a great move. It's a great chess move to, you know, be like, well, listen,
you're already in the space.
Yeah, man, you are. And look, you already got some money. It's kind of like a bank being like, you know, here's a real world relation. We'll put $100 in your account if you start over here. It was like, well, we all started on some Bitcoin Cash. They just straight moved us over and said, well, here's you got money. And it's worth less, but it's still worth money.
You know, there's a lot still that, you know, I mean, I work in the application layer. So, you know, I'm up around the ERC20 and Net5 layer, much more so than the underlying blockchain layer. So I can't speak authoritatively about the ins and outs. A lot of, you know, what I talk about those underlying things are, you know, speculative based on my understanding of the blockchain, as limited as it is. But It just seems to me that, yeah, those are plays that are made to make sure that people are already involved from the beginning. And since you already have the data, like imagine if your bank was going to clone their database for a new accounting system, right? Yeah. But by the way, since they cloned the database and you had an account over here, you have an account over here, and the transaction history is the same, right? Well, now you've got two accounts, Yeah. The only way that doesn't make sense is when we start going back to real world applications of currency. But from a data perspective, it makes perfect sense,
Totally. And it's kind of a chess move, but in the real world, could you imagine how much trouble a bank would get in and be like, listen, we closed down the other bank, but we're a different bank. We just opened you up an account here too. Who got in trouble with that? Wasn't it Chase? It was opening up people's accounts left and right just to boost their numbers.
Oh yeah, I do remember that because they had a goal. I think it was actually Bank of America. They had a new account customer goal, and so what they were doing was you go in to set up one account, and then you go in for a secondary service like a mortgage or something, and they would open you up like an insurance account, a this account, a that account, and all of a sudden you have like 5 accounts with them, and you're like, what the hell? What is this?
I got a checking. No, you got a credit card. You got 5 loans. You got everything.
We certainly see those kinds of shenanigans all the time, but there's some real differences still between real world USD buying power and crypto, and for all the talk about USD being a fiat, crypto's far more of a fiat than USD is at this point because it only has value as long as we all agree it has value.
Sure.
At least with USD, you've got some authoritative institution that is ascribing USD value. We don't even have that with Bitcoin. We just all agree it's worth this much because that's what we're willing to pay for it, USD.
Well, and that too. I mean, how many of you guys have seen? Because I opened a Tab Trader app account to see all of my different crypto accounts in one thing. What's nice too is you can set little alerts for each different exchange, and you can watch USD, Ether, whatever pairs you want in your different exchanges and shit. Sometimes I thought, man, if I just change my Ether from this account to this account, I made $40 a coin. Why? Because they all have different amounts of what Ether's worth. So I'll just throw it over there, make $40, move it back, buy the, can that really happen that fast, that easy? Like, are you guys doing that?
That's the concept of exchange arbitrage, right? Is playing off the differences in values between exchanges and doubling up. I mean, you see the same thing in currency trading where you'll have different currency traders that are listing different exchange rates for pricing. So, I think one of the best examples of this right now is Cuba. We just opened up some limited tourism with Cuba, although Trump immediately fucked that up, but whatever.
Amongst other things.
You're a U.S. traveler going down to Cuba, right? And you show up to Cuba and you're like, okay, I'm going to exchange my USDs for Cuban pesos. And they're like, yep, you get the CPC. That's the peso that we've specially created for Americans. And $1 is worth 1 Cuban peso. Yeah, but if you're like a tourist who hasn't been part of the embargo for the last 50 years, right? You can do an exchange through your Bank of Germany and you're getting the actual native Cuban currency, the CCU or whatever it's called. And you get a significantly better value because that peso doesn't have anywhere near the value of buying power of a USD dollar,
Right,
that's
totally.
Something that they're doing. So you can do arbitrage between these different things and eke out value in the differences in exchange rates.
Right, that's wild.
Depends on how motivated you are.
I'm saying like that's what I really realized with cryptocurrency is like there's some math genius that's sitting in there being played by who's going to be played by an actor in some movie here soon, and he's making millions of dollars and billions because there's even I can see it and I'm no math genius, like all it would take would be somebody who's much better at coding and can whip together some API information and set bots away, and off it goes, you know?
And we've already been playing with that. I mean, one of the products that we're working on right now is called the Pocket Network, and it's a relay network. Essentially, you buy into the network using, Ethereum or something similar, and you create a proof of stake that way by putting your Ethereum into the network. But it allows you to include a library in mobile app development so that you can accept any of the supported crypto tokens through your app, right? So we have a little fake app called Duber, and it allows you to like book a ride, and you can pay for it with one of your associated wallets on your mobile device, right? So you can like, hey, I'm going to get a ride downtown. I'm going to pay with Ethereum, right? So what happens is that Ethereum goes into the Pocket Network and it's immediately converted to the Pocket token, right? And then the developer at whatever point can choose to cash it out in whatever token they have set up with their connected wallet. So it's a relay network that uses oracles to speak to external exchanges, and it constantly has a good idea of what real-time pricing of those things are. And so one of the things we talked about was maybe we should just create an arbitrage app that rides on top of that network, and just every time it sees variance between exchanges on certain tokens, buy from one, sell to the other, done,
Totally. Yeah. And why
Lots
don't we?
of people are already doing that, I would assume. If we've talked about it, somebody else has already built it.
It's like, and why was the end of that conversation not, okay, here's a Perl script or a Python script, we'll just run that bitch right now. Good to go.
Well, it's, I think a lot of these like trading groups and pump and dumps and all the rest of that, that's what they're doing. It's all automated trading. They're using bots like Brian Cribbs was talking about last week, and he's like, he showed me his logs today. It's done something like 3,300 trades in the last 24 hours.
Oh my God.
Up with that,
Yeah. Yeah.
It's doing like 400 trades an hour. So
how awesome. Well, and that's the thing is, now is the time to do that while there is no, overlord of government who really and truthfully has a stake in it, because that's the only reason why governments really get into controlling any of these things, because they have a stake to win or they have a stake to lose. If they see everybody moving their money through there and no longer using US dollars, they're going to have to put their foot down, because that's not going to work, for old money, way old money, like,
I mean, we're doing it too for the same reason. So it's not like, it's not like this is really some sort of, altruistic thing,
Oh yeah, no. They just got there first.
The concept of the Bitcoin to begin with was as an incentive for nodes to participate in the spread of this data transactionally, right? A built-in method to reward participants in the network. So from the very beginning, this has always been about how can you make money off of it,
Sure. Well, isn't it all? I mean. Sorry, she's agreeing that it's always about money until it's about nap time. Then it's all about.
I've had 2 of those. I know the feeling well.
Thanks.
Beautiful. Well, we're at 5:02 now, so I'm gonna go ahead and wrap it up for the week. Some interesting discussions, and nice actually getting to have Nico Noir on here, because of the fact that he and I are both kind of old school, crypto analysts, so to speak, in watching the marketplace and the technology and seeing how it evolves. And despite the fact that we're both bullish on Bitcoin for the long term, we have some really different perspectives on why and what the use case on those things are. So it's always nice to get some sort of competing opinions in the conversation. But that'll wrap us up for this week. And thanks, everybody. I appreciate you coming and hanging out. And I hope that, others who watch are able to get some value out of this. So we'll see y'all back in group.
Great.